What's up, everybody? Jeff Beers here, 40 Finance channel. Hope you're all doing well. We finally had some action yesterday. Today is Tuesday, and yesterday we saw a little bit of market weakness. It really only got down to 2 or 3% on the NASDAQ, but you know, my hope was, and I'm not hoping for doom and gloom, but my hope was that we would see some more buying opportunities, frankly, than we actually saw yesterday. And then here we are today, and the market has already bounced back, at least heading into lunchtime. We don't know how things will fall as the afternoon goes on, but as of right this second, you got a 0.5% up on S&P, Dow, NASDAQ plus 73%, Russell 2000 holding about flat. And I didn't look at Bitcoin this morning. It had some weakness yesterday. Looks like minus 1.73% right now. So if that was the dip, then, you know, for starters, I missed the whole thing because I didn't see that big of a correction yesterday. And on the flip side, I expected more bleeding to go out this week. That obviously didn't happen. But what do we have to look forward to in terms of if you're a dip buyer like myself? Well, one thing that could come up tomorrow is good old Jerome Powell will come out. I think there's a Fed chair meeting of some kind tomorrow, and he's supposed to make some sort of public statement. And almost every time that guy makes a public statement, there's weakness in the market. We'll see if that holds true. And then beyond that, we have the usual, right? Is the Delta variant at risk in terms of the consumer market? That seems to go up and down every week. And then you have the concerns in China, which were a little bit exasperated this week. Those are the kinds of things that are on the radar: interest rates, housing market, jobs and payrolls. It's just hard to envision that we won't get one of those things falling through the ground in the short term. But, you know, that is a glass half empty approach, and maybe things continue to go well in the market. I just think we're running on the best case scenario type of thinking right now with stock prices. And I don't know if the situation calls for that, to be honest with you. So that's some of the stuff we're going to look at. I want to say hi to Andrew, who's also waiting on the dip. Boring day. It has been a boring day. Sam checks in. Hey, just arrived. Where do you think the dip will stop? Looks like today, just to be honest with you. We'll see if this holds through. Sometime in the afternoon, we get some more. But that, you know, let's look at like QQQ or ARC, something that has a little bit more volatility than like an S&P. All right, so 5-day, let's just do the regular chart here if I can squeeze it in. These charts are sometimes hard for me to put in here because they have so much going on, and then I have my face in the way. Let me try to fix this while I'm talking to you guys. And remove that. All right, here we go. Not my face anymore. So this is QQQ. This is, how many days is this? Let's go 1 month. This is what we saw yesterday. We did get below the 50-day moving average. We got down to a 30 on RSI, certainly the lowest it's been in a month. But if we bring that out to a year, we actually had, I would say, was it a deeper cut in May? RSI about 32, that was the same. and it was definitely a deeper price cut. I mean, I would expect at the bare minimum that this level would be the dip, right? Or potentially what we saw here in mid-March. So before I got excited, that would be approximately the place I would start to get excited. Now, does that mean it's going to happen? I have no idea. Let's look at ARK, only because we could argue that ARK is going to be the most overvalued of stocks from a fundamental standpoint. So watching what ARK does can sometimes give you an idea of how much froth will come out of the market, if you will. So obviously in February, we were at all-time froth. And then we dropped down into March. We had really just 2 or 3 weeks of down prices. And then you see in their May, the spread between their 50-day moving average in this low point was much higher than the QQQ. Then we sort of bounced back and stayed flat. From an ARK perspective, though, we didn't even get, now that I look at this, looks like August 19th was a better dip than yesterday, okay? So if that gives you any sort of idea, what yesterday was a blip on the radar. I mean, I barely even had time to kind of think about what my strategy would be if stuff came down more. And I think that that's really important for everybody who's rooting for a dip like I am. Again, I do not want the stock market to crash. I do not want people to lose their investing money. I'm staying in the market. I am not selling out of anything right now, unless, you know, some price goes up crazy. Smile Direct has some rumors swirling. If that were to take a pump, I would probably cash out, to be honest with you. But for the long term, I'm not cashing out of anything. All I want is a buying opportunity to add to my investment. So please, I know there's a lot of doom and gloomers on YouTube. I'm not one of them. I'm just looking for a good price. All right. Yeah, it's JP is asking about DraftKings, and you hear the sigh in my voice. I react similar to how the other investors have, and that is, do we really need this? And you see what happened to DraftKings here, at least so far. Try to pull this out a little bit. My opinion is very mixed on it. So on the one hand, it's good that DraftKings continues to make acquisitions. I think that's an important part of the revenue strategy. On the other side of the coin, though, I just don't know if we need a European-based company. I mean, I really don't. Let's see what they say about, try Barron's. Here we go. UK betting giant Entain in a potential deal that would bring consolidation to the betting sector, blah, blah, blah. It received stock and cash proposal from DraftKings, according to CNBC. All right, so right off the bat, nothing wrong with the UK betting market, but I do believe that DraftKings' sweet spot is the growth in the USA, and not just sports betting, but also iGaming, which is the sort of virtual poker tables and roulette tables, stuff like that. I don't know enough about Entain to tell you how this would work, but I don't like the market that it's in, and I don't necessarily know how much value it adds to what I think is the true value proposition for DraftKings going forward. Keep in mind, Europe is a mature sports betting market. I'm sure Entain has, you know, thousands and thousands and thousands of customers, but the growth is here in the United States and in Canada, and the opportunity is here. So it's a mixed bag for me we'll see what happens. I'll just leave it at that, but it didn't totally excite me, put it that way. They have enough debt and stock compensation out there. I don't think we need to add more. Benjamin, could you go over QuantumScape? So I will look for you. This, I can tell you though that that's not really my sweet spot. Is this still a company that has zero revenue? We certainly don't have an EPS. I know that, yeah. So you're betting on technology for the future. I have no idea how you would ever evaluate this company. And I know that there will be plenty of people who will try to evaluate this company. I just don't see how you can do it. I'm not interested in QuantumScape. I saw, what they're saying their technology does. I don't know if it's field tested. It doesn't sound like it. It sounds like other car manufacturers are interested in what they're offering. I think the best bet for QuantumScape is somebody buys it. I think that's what you're rooting for. All right, Jordan, thinking about selling Sony. Not a bad call. I had looked at Sony. It's been on a video tour of mine as far as being undervalued. And let's see what you're looking at. You're seeing all-time highs. Okay, you're in 112. And yeah, over the past 5 years, certainly. And pretty close on the year. I mean, you had February an inch higher, but that was in the height of stock market FOMO. And if we look at valuations, forward P's at 19, definitely higher than we saw back 2020 and before, aka normal times. Price to sales, not too bad, but it is higher. And if you want to get into the old EV EBITDA game, which is not one I fully support, by the way, you're running higher there. Analysis side, we've got growing EPS next year, which is good. And sales, yeah, single-digit sales, I think is something that's interesting about Sony. You think about PlayStation, and I'm sure PlayStation, that unit, is in easily double-digit sales numbers with the new console. But I could see where Jordan's coming from on this. And if he made a couple bucks off of it, I wouldn't blame you. You could make the argument, Jordan, that fourth quarter is going to be, rocking for Sony because, do they fix the issues with supply and demand for PS5? I don't know. I haven't seen it because I've been trying to get one for my son. He's been very, very patient. And and he's a teenager, and his friends, a couple of them have them. He said you don't really need it to have fun as far as with the group play or the online play. He said, a ton of his friends have PS4s, and there's some cross compatibility now. I don't know how it all works. But long story short, if Jordan made a decent chunk of money in a short time frame, I would say, why not? Really, what would be interesting to me, I'll tell you where it would be a no-brainer. If you bought this and you went through the Q4 earnings report, I'll try to give you an estimate on when that would be here. 1 second. Seeking Alpha is really good for this as far as projecting when these earnings calls come in. Oh, not that. Let's go down here. Okay. Fiscal year ends on March 2022. So with that in mind, you would probably have to wait till late April, perhaps early May, to get the reading for the whole fiscal year. If you wanted to go on a quarterly view, let me see if I can bring that up here. Quarterly. If you wanted to do what I was suggesting and catch the period that ends on December 2021, you are probably looking at January, February earnings call. And the only reason that I would say that could be super interesting is it's obvious, right? Q4 has got to be, oh man, let's take a look. Q4 has got to be their biggest time period. Fiscal Q3, $26 billion. Oh yeah, so fiscal Q3, but in our world of shoppers, this is the same thing as Q4, $26 billion. You compare that to fiscal, let's just compare it to September, and you can see that Sony definitely makes another $3 or $4 billion in this particular quarter. So now that I'm saying it out loud, Jordan, maybe you wait till January, February. The risk, of course, I don't think there's any risk that Sony has a crappy quarter in consumer holiday land, but there's a risk that you could see some doldrums in the market that would prevent a sale. But man, if you made it this far and you've held it for at least a year, so you don't have to pay the standard tax, you can just pay the capital gains tax. I don't know. I think I would wait for the Q4 numbers. Sorry, this is all just my opinion, as you guys know. JP Morgan and all these guys, they don't call me ever. I'm just sharing what I see as a regular guy. JP chiming in on the Entain deal. It's a partner with BetMGM. And that, I did read that Entain also owns Party Poker, which is, yeah. So the Party Poker part of that is interesting because that gets into iGaming. And I think that is, unfortunately, when you read about DraftKings, the people who don't study DraftKings, they just know the name, they think that it's only sports betting. I think that that's a big miss in the calculations. I think in America, sports betting will do well. I think it will overperform projections, but I think the iGaming part in America will vastly overperform anything that sports betting does. And I've never been on the Party Poker side. I don't know a ton about it, but if we did have that in America, dude, it would crush. It would just absolutely crush. And you want to know why? Go stand in any gas station line and all the people buying lottery tickets in that, do you guys have the Keno, where it's like there's a TV screen and fucking numbers pop on the board and people are scratching on their cards and stuff? That world disappears and everybody's on partypoker.com. I could see that in a heartbeat. Let's see, thoughts on Heidi stock or the MJ space. MJ space battered potential. Let's take a look at the one you were asking about. Not a market I've studied a lot, just to be fair. So as always, take my opinions with a colossal grain of salt. Year to date, high in February, down to 632. I don't know if this one will be covered by analysts. But let me show, without knowing what high tide's doing, let me just read about it. I'm going to squeeze this in for you, if this will let me. Hold on. As usual, I have to adjust this camera. Doobie-doobie-doo. Here we go. High Tide operates vertically integrated company, Canada, United States and internationally, design, manufacture, and distribution of accessories and lifestyle products, also involved in wholesale and retailing of cannabis products, as well as operates and franchises licensed stores. Okay. So, and they provide Data analytics services, such as Grass City, CBD, blah, blah, blah. Okay, so 92 locations in Canada. This is what's going for it. This is what I understand in the industry. So if you're operating this level in Canada, I don't know how that compares to competitors, but I will say that that's a strong retail footprint. The catch, of course, for all these companies is what? USA. USA. I mean, that's the thing that's really hard, that's dragged down the big dogs. Is Tilray and all them still down? I know it's probably a different type of company, Tilray, because they are essentially a farm. Yeah, Tilray hovering at 11.26. You see the year to date. We see, here's your cannabis boom in 18. Then we got into the pandemic. And first part of the year, it got up to 29. Now you're bleeding out a little bit. Anything in cannabis, I would recommend holding out till the last drop of blood is pouring out. I mean, you have to have a no-fail entry price here. I don't see how much farther it could go down. But as soon as there's a freaking USA headline that says regulation's been delayed, you know, Biden can't do this, blah, 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 you're staring at another stream of bad news that could bring the price down more. And this is going to be a news-heavy industry. As soon as someone comes out and says regulation is on the Senate floor, boom, these things double, right? So only spend what you can afford to lose in an industry like this, at least in the short term. I've seen no roadmaps that suggest national legalization in USA is on any sort of track to approval in the short term. I've personally seen nothing, but you know, you want to play a couple of these cards. I guess I'm wondering why do you pick one over the other? And that's where I can't comment. I would be inclined to stick with the farming side, but there's not as much money in that as there is in retail. So I'm not saying Aurora is the best. It could be Tilray, it could be Canopy. They all have the same chart, right? And you see that here. This chart continues to lose interest until there's a new news item. So I don't know for sure that you're buying low here. I think that's very difficult to say. Anyway, my 2 cents. Who we got? Jabril says Mara, M-A-R-A. Oh, Marathon Digital. This is the miner. I've been thinking about investing in one of these mining companies. Let's make sure that's what this is. Yes. Mines cryptocurrency, focus on blockchain, blah, blah, blah. I've been thinking about it. Really, the small percentage, which I'll have a crypto update for this channel at some point, what I'm doing off to the side. And I like miners. I will purchase one of them to go with my very, very, very small collection of cryptocurrencies that I'm trying to build out so that there's more of them to talk about on the channel. But I had been attracted to Riot, and I would love to tell you what the difference is, but I really don't know. I had been attracted to Riot because I read through some of their investor presentations. So if it was today and I had to pick a side, I would probably pick Riot because I know the most about them. But I don't think Marathon, I don't know what the advantage is. So I think that a mining company like that is worth a shot. The catch being, don't buy it if you don't believe that there's a future for crypto, because we know what's going to happen, right? headlines go negative, all these stocks are going to go down, price is going to go down. So the risk, excuse me, the risk potential here is huge. You're a couple regulations away from a company like Marathon being almost useless. So buy low is the only tip I would have there. Mohammed, could you please have a look at On Semiconductor's fundamental analysis? Looks great and I think is undervalued. Sure. Let's take a look. On. And let's just get that little intro paragraph, always helps. This company is in Arizona. Semiconductor components for electric devices, 3 segments: power solutions, advanced solutions, and intelligent sensing. Power, so PSG is an important part of semis because as the world goes on, computing power is starting to be analyzed at molecular levels, to be honest with you. So if they are offering ways to lower power consumption, which I'm not sure that they're doing, there's voltage regulation, but if they're in the PSG game, I think that's good. Advanced signal segment, mixed signal, don't know a lot about this world, so I'm not even going to comment. ISG, complementary metal oxide semi, image sensors, proximity sensors, so that's obviously a good world. Photon detectors, radar, we know where radar is going, it's going to be big. Actuator drivers, so there's some good stuff in here. I would say they're in a good space as far as what they're developing. Year to date, 47, up from 32, so approximately a 50% gain on the year. So they're beating the S&P, I believe. I think the stock market in general is up about 17% this year, last I heard. Switch to annual. This company's been in business for a long time, so we can get a good feel. Semiconductor valuations, we know they're up. In the case of On, their forward P of 18 is a little bit higher than we've seen in the past. I would say 2019 is going to be a good place to look because we didn't have COVID and yet technology was still pushing at a high rate. So let's just pretend 15 is a good number. PEG ratio though, so they're growing faster than they were in 2019. Price to sales, 3x. You got to be careful there, only because the sector as a whole doesn't get very high price to sales. All right, let us look at projections. So this is going to be the big kicker. EPS, last year 85 cents. Basically going to 3x that this year if they hit it. Next year, assuming they hit that though, this EPS growth is slowing rather dramatically, just to call it out. 27 cents. So you grew 3x on the EPS line. Next year, no big projections in here. So at the end of this year, if we took 247 and 447.85, that's where we get our like 18 or 19 number that we saw before. Next year, that number is not going to change a ton unless these projections are wrong. And it looks like next year, your single-digit growth rate. So I would say be careful, because when you get into this world, a single-digit growth rate on the top line, you could see some of the momentum fall out of here. You have a stock that's up 50% already this year. Let me see if we can get a better look at those earnings. Earnings estimates. And here's what I mean. So again, let's switch our attention to this fiscal year. That's going to be a big part of what people are looking at. This year, guys, it's just about in the books, okay? We're not really flying blind anymore on 2021. For a lot of companies, they have like, whatever, 1 quarter left. So as soon as you hit January, this is your number going forward. 12% EPS growth is what they're saying compared to 189% last year. So your forward PE drops to 17.24. That is still above 2019 levels. And yes, we get confirmation here, single digit growth rate going forward. I don't know. I will say you're in the right industry, but I wouldn't, I'm too concerned about single digit growth rate to buy it at plus whatever it is this year, plus 50% price. I think there's probably, you're going to need some news headlines. And I'll give you, you guys know that I hold Taiwan Semi, and I am at the mercy that the Chinese government doesn't screw this one up. But let me show you Taiwan's growth rate, because it's pretty impressive. Next year, double digits, double digits, double digits. So that's why I like this one, right? Now, to be fair, price to sales, way over what ON had, way over. So there's definitely, you could argue, some fluff in here, certainly compared to what ON had. Now, on the EPS growth side, this number looks terrible, minus 44%. Huge outlay in capital expenditures, building new factories, etc. Get back to that growth module, though, next year, plus 20%, then plus 20%. I didn't look at ON's dividend. They almost all have one. Well, it's saying no. Now, sometimes I found this to be wrong, but no dividend for ON that I can see. TSM, on the other hand, has a decent one, 1.5% on today's price. So between the two, I'm taking TSM more overvalued from a fundamental standpoint, but a lot of that is because what you saw with that growth rate, and they're building new factories, and quite honestly, I think they outperform. I think they outperform that plus 17%. So, all right, all my stocks are back in the green. That's what Black Circle says. Good for you. Terracina, for value and long term, what do you think of Intel? Entry price. So I would say Intel, intriguing plans for the future, very intriguing. And with that being said, though, you have 1 to 2 more years of flat. So be very particular on what price you buy in. That's my 2 cents. There are plenty of other people on Yahoo, or not Yahoo, YouTube, that think that it's a gold mine right now. And we'll see what happens. I see flat for the immediate future. Read the investor report, make sure, and when I say investor report, I'm not talking about the 10K number edition, right? I'm talking about the PowerPoint screen that they should have here in November. They should have an investor day where the plans are laid out for the future and all the pictures and shiny objects. Here's the factories, whatever. The catch with Intel, they have let us down on several reinvention plans. So will they pull it off with Pat Gelsinger, the new CEO? I like the guy. I really enjoyed listening to him on the last earnings call. But investors are going to doubt Intel for a while till they, show something. So just be careful, buy low if you can. Reginald, Paysafe. Paysafe's getting there. Most of you know I owned it at $14. Booked a loss. People have asked me about it recently, and I say Where's the bottom? That's what I can't quite put my finger on right now, okay? It just keeps slipping on the bright side. The analysis for it is going up. They were in single digits. Now they're up to double. There's an X factor in there that Bill Foley, who is this, I don't know if he's officially CEO, but he's the lead investor, if you will. He has ties to, I think, BetMGM off the top of my head. Can he get Paysafe into that platform? I think that'd be a huge win. Right now, here today, where's the floor? It just keeps going down. I wouldn't buy it till you saw a little blip up of some kind. I'm interested in owning Paysafe again, certainly at this, 775 level or whatever we're at today. But I will be holding out until I see some signs of life. JP, any news on Evergrande? The only thing I heard on the radio this morning was a pretty good analyst. I don't know who it is. I say pretty good analyst, I don't know who it is. But he went on and on about, I don't think that this is connected to America in any way, shape, or form. He thought that the risk was compartmentalized to China, both through their government and Chinese investors, and that the average Joe and the retail market did not have much risk tied to it. With the exception, of course, if you own Chinese stocks in general, this is another hit, right? And so I'm not concerned about it on my front. I actually do not have too many stocks that are international in that way with Chinese exposure. You guys know I don't buy standalone Chinese stocks. I believe, let me think about this for a second. I believe that I only have a couple that even have a Chinese market. That would be, TSM, I mentioned. Well, they have factories in China, so there's a problem there if things go wrong. And that's it, guys. Now, that does not include like your Amazon, who doesn't do business with China, but obviously Chinese products litter Amazon all over the place. I don't know what could happen there, but yeah, I'm not super worried on my life with it anyway. Gee whiz, I see Upstart up another 10%. Will it benefit from higher interest rates? You guys know that Upstart is not, I mean, that's way out of my game now. This is on full-blown momentum, and congrats to everyone who got a feel on this one. But there's no fundamentals that could support this that I see. Right now, 52 times. And granted, that's trailing 12 months, 52 times revenue, but geez, I just don't see it. What do interest rates do for Upstart? It probably helps in the sense, I just don't know if the people who are using it even know what's going on in interest rates, to be honest. Unfortunately, the people who use credit systems the most are typically the ones that are not as good at managing their finances. You can see here's a forward look at PE. Hopefully this year you get in at $1.40, and next year, if projections, you can see how much slower those projections are. You get down to 168. Let's take a look at some revenue numbers. 200% this year, only, I'll say, 42% next year. That would bring price sales into the 20s, so it's not as bad as I thought. That 52 we saw on the trailing 12 months metric definitely strikes you in a negative way. This 20x gets a little bit better, So I would change my tune from mega overvalued at 320 to maybe folks are right after all. Because 20x in this day and age, not too bad. Now keep in mind, 20x, I say 20x at this day and age, right? And what I mean by that is 20x on the prices that people are paying for stocks today. So if you did see people pull back or not buy as many stocks, then you would expect that forward price to sales, the range to maybe get into the 10s, the 15s, right? So no way I would buy Upstart at 320, no way in the world. But if this market continues and you don't see some of the dark clouds that I see, then who knows? And if you made, let's say you got in at 200 and you made 120 right now per share, you know, I don't know. I would sort of be inclined to take some profits, but everybody has their own look at it. Does BNPL get any bigger than it is now from a hype train, right? I mean, it is so hype right now, and you need that hype to continue. All right, let's see. Robert Scott put Halo in. And Robert, therapeutics, it's just not one I'm going to know much about. Let's see, you got a 26p ratio. Sales, so you got a couple good things going for you if they hit analyst projections. You have a growing EPS, granted slower than this year, and you have projection of plus 34% sales. Those are positives. I wouldn't know what this company does if they put a bottle of it right in front of me. So I'd be lying to you if I made any sort of opinion. Jordan wants out of Qualcomm but missed the window. Hang on. Qualcomm, I think will hit back. I think them and Micron are starting to get to these points where I just don't understand. I don't think the, let's just look at it. I don't think that analysts are going to be correct on their projections for sales next year, okay? Qualcomm, 10%, shucks, sorry guys. Qualcomm EPS, 923 next year, only plus 10% sales. I think that's inaccurate. I think knowing what we know about the industry, this number continues to go up. Let's see what the trend is. Yeah, so 90 days ago, Qualcomm at $8.60, that was the projection. You've already added 60 cents to that in 90 days, and we're not even at 2022 yet. I would hang in there. Qualcomm will have another day. Same with MU. That just can't catch a flyer to save its life. This is what is funny about MU. I've shown this 1,000 times. 283 last year, all but doubling it this year, almost doubling it next year, 29% sales this year, plus 30% sales next year. What the heck is wrong with this one? The number one thing that holds it back is the concept of a moat. What they make is not particularly advanced or, you know, they're not the only people that make the type of memory chips that they make. So there's fear of competition. I get it. They're just on fire right now, though, and they can't catch a break to the upside. All right, guys, I have got to run. I'm just going to breeze through these questions in case there will be an easy one. An end phase question. So, yes, I do think there's still risk to the downside for end phase. I am watching it. I did sell out of my end phase earlier this year. because my loss was too high. I expect it to bounce back. And anything else? Zillow, William, I'm a big fan of Zillow, and I own it. You can look for a video for more about it. Derek Ridlinson here, always has good insights. We have 2 gaps on SPY. Expect to fill the gap at 440 from yesterday, and then the one at 390 from July. So there you go. We heard it here first. All right, guys. Thanks for watching as always, and we'll see you on the next live stream. Take it easy.